Good
evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Wednesday, November the 29th, 2023. Boy, I tell you, as soon as you think you got it together on account, as soon as you believe it's like, okay, this one is all figured out, the market decides to throw you a true curveball. And that happened today, more in the S&P and in the NASDAQ. So we're going to start here with the NASDAQ. I'm on a 4-hour chart so that I can show the entire move thus far. So I'm counting in the NASDAQ a minor fifth wave up. And within that minor fifth wave, we should have 5 waves of minute degree, of which 1, 2, 3, I feel very comfortable in saying are complete. But wave 4, which I thought and had been continuing to mark as being complete here, threw a curveball today. Now, let me take this down to the hourly chart and open it up so that we can now take a look inside of this ever-expanding sideways move that just won't quit. Now, what actually am I looking at now? I've had to count this out again. Why? Because even marking that as wave 4, putting in where it could go, it started to go. We got a decent rally off of the numbers this morning, and we made it above 6,200. Feeling I'm on the way. We're going to get there. We're going to at least get to 16,253, 54, up in that area, pull back, and make one more attempt at a new high. Now, it didn't. So I've had to backtrack and still consider. So I'm going to present basically 2, and there's actually 3, but at least 2 alternative of what could possibly be going on with the market right now. Again, I've been counting what I'm assuming is a 4th wave, a minute 4th wave, which is now stretch out a week and a day. Not bad. We still can live. But I've been feeling we had A, we had a B, we had a C. Then we're going to have this. But this move, as glorious as it was, as nice as it was, only produced 3 waves up to 16,208, which was today's high. Then we sold off. And even if I was thinking 1, 2, 3, we get a little 4, and we come back up on a 5, no. It went, crossed over wave 1 of this C wave, of this final 5th wave up, whatever we want to call it. It broke down, crossed back, and penetrated by a lot the 1st wave. So even if it was a wave 4, it dug too deep. What else could it be? Well, I started to throw Fibonacci's on this to see what these relationships could actually produce. So if I'm looking at this being A, B, C, and only the A wave within wave 4, and then this turns out to be 3 waves, and it could be the B wave within wave 4. How does that fit? It's an irregular. So the running Fibonacci, when you're using Fibonacci, it has been documented and it is used widely that for an irregular B wave, the most common fib retracements or extensions are going to be 1.236 and 1.382. So I ran them. 1.382 comes in at 16,190. It topped at 208 and immediately was rejected. Now, so I'm like, wow, okay, could this be A of 4, B of 4, and we're in a C wave down? Started off great, came up like thinking, okay, 1, 2, we're going to get a 3 and a 4 and a 5. As complicated as that may be, it stopped. We had some good downside moves, but not enough as it started. So I leave open that potential. Now, again, if we're in that irregular B wave, which makes it an irregular fourth wave, so to speak, then the C wave part of the corrective phase would come in at a Fibonacci 1.618. So 1.618 of wave A. If wave B was 1.382 of wave A, wave C should be 1.618 times the length of wave A. That brings us back down to 15,922, we'll call it. Now, that does not necessarily put in a new low below this portion of the move, but it fits in terms of the irregular. Now, what would that then suggest? If we get down there, put in a C wave, label it 4, that suggests that we still have this whole fifth wave yet to do to the upside. Okay. And if that's the case, we're still looking for a move up above all of this. And I could just give you some thoughts on what that could look like. So I'm going to put in wave A, wave 1, and now we're going to measure it out. So I got to come right up here onto that line. 21, 21, 21, a little bit more. Come on. Sometimes it's really hard to get it good. So I'll just go there and then go back down and I can fix it. So again, coming in here, we actually, let me see what I got going on here. Let's see. We're going to edit that. 120. Actually, we're going to call it 121, but I think it said 72. So we're going to put that in and see if that doesn't match it up. Pretty much. So here we have the move to come up. Again, this, I can actually take this out for right now. And now we would just be looking at this. Leaving that in as the completion point for the C wave. If that works and it stops right there and we get our move back up, well, 100% is 16,257. 1.618, 16,464. Still in line with what we had previously, which is what I was looking for today. Didn't get there. So we have 16,257, 16,327, 16,465. That would remain if we come down and it holds. Scenario number 1. All right, let's go back into this. And now I'm going to take this away. Oh, I didn't mean to duplicate it. I meant to cancel it. And let's do that again. We're just going to remove it. And I'm going to remove this right now and remove this and turn it back into that fourth wave. Again, I got to show both because this is, I know it's complicated for me just to talk them with that other labeling. So let me put both on my screen and we can see. And if I try to break this down, I'm going to break it all the way down to a 15-minute chart and open up this chart. 1, 2, 3, 4, 5. Ugly as it is, calling it a 5. That's a 2. 3, 4, 5. Sloppy. So that's why I continue to say I need to put both up there. So that's why I'm doing this, because now I will rely on the market. Elliott is one thing, and it does give us the potential and the possibilities of everything. But it is going to, and always is, the market itself that will tell us exactly where it's going to go. we now have two scenarios, one that would allow for an additional move down and another rise to finish this wave, this minor fifth wave. Now, taking this back out to that hourly chart, if we're going to use 1, 2, 3, 4, 5, then two things. Let me go back in here. Two things. Wave, here we go. And this is actually the third. This one, the second, would suggest we just start to tumble. We came off to a good start, but then it seemed to slow down and actually stop, and they started to buy back up into the close. Not unusual. Not unusual. Tomorrow we have initial jobless claims and that PCE index. Everyone's hanging their hat on that. God only knows why, but because it's like the Fed. Now we get all the Fed governors and the Fed president and all the people from around the country. They're out on the stump. They're out talking it up. And there was one out there today, I'm not sure who it was, talking about that. It's like, well, they're not opposed to additional interest rate hikes. Well, that goes totally against. Now, I did, by the way, go and look at Fed funds today. And it's true. Fed funds, although this was down slightly today, Fed funds are factoring in that they're going to start to lower the rates next year. You can go look, and I'm going to tell you how you can do that. You can come over here, you go to where you can get all the products, and you just put up ZQ. Those are the 30-day Fed funds futures. Now, here's March. Just scroll down. May actually was down a little bit. June was down a little bit. July was down a little bit. September was down a little bit. So that started to come in. But at the same time, they rallied the 30-year bond, the future, and they rallied the 10-year note. These were being, moving higher. So basically what you can do, if you really want to look at this, you look at May, trading at 94.945, right? If we're saying that 100 is the par, right? That's the bond. And if someone's willing to pay 94.945, essentially, 100 minus 94.945 equals, the interest rate would be 5%, 5.05%. That's the interest rate. So we're at 5.25 to 5.5. Well, okay, that starts to bring it down. So you can go more, walk it down the line, and you'll see what. But here we are, July. September. Not lower. Oh, this is September. That's August. This is September. That's not lower. That's higher. Gets interesting, folks. It gets interesting. I'm just letting you know that's where I go to check to see what's the market thinking. Where do we start to get lower? Well, there you have it. Now, back to our chart. Back to what are we doing? If indeed we're going to start to move into a larger decline, which for many, many, many analysts, they're telling you crash. Be prepared for the crash. And that is very possible, but I'm not terming it a crash. I'm going to call it a primary C wave down, which will have a logical bottom in my mind. It's going to come off. A C wave can resemble a third wave, and this one's a big one. This one is on a primary degree, so it's pretty big, if indeed this particular count is what pans out. Now, back to what can we look for tomorrow? I have to tell you, those numbers are going to give us, they're going to set the direction. Today, we saw that, well, they came in and they bought it. And then on a dime, turned and started to sell it. So it really presented a rejection of that higher level, and they brought it all the way back down to within what you might want to call the comfort zone, and actually got close to breaking back below 16,000. And that's after earlier hitting 16,208. So here we had from this low, basically, to that high, 200-point range. Now, that does not necessarily suggest we're going to keep going up. Now, if this is still 5 waves up, and I want to consider this still wave 4, is this wave 1 of 5? That's the third scenario, folks. Is it just minuet wave 1 of minute 5? And we really are going to start cruising towards these upper levels? Boy, something's got to come out of the woodwork and be presented as a catalyst and very positive to push the market up to that level. Can it happen? Yeah, it can happen. I'm not saying 17,000, but 16,400. We've got those. We have those fibs. So again, we have 3 scenarios. Now let's let the market. So again, now I want to just do a quick talk. What's going to suggest who's doing what, which one of these is in force? Well, we already had, if this was A of 4, B of 4, we had 15,931. So if it were to come down and really break below that level significantly, then no, it's the wave 4 is likely complete, and this was wave 5, and then we are breaking down. Then we are again looking for, again, under this particular scenario, the irregular would basically be out. We have an A, B, C, 4 done, 1, 2, 3, 4, 5, 5 done. So the irregular would be invalidated. Pretty much if it starts to really come down below 15,000, and you got to let it go 15,900. Below 15,900, pretty much not likely. And I can put that number back up again, right? 15,922. This number, no. I've not seen where in the 4th wave that it comes all the way down. Down here, even let it go to make a new low if it needs to, maybe 15,900, and start breaking below 15,900. And it's basically going to start to negate that. Leave this as 4, put that 5. So then if that's the case, what are we looking for? We're looking for the development of 5 waves down. And if that be the case, folks, then this needs to pick up the pace without these. This one, yeah. But this one, it should just go boom. And it may hang out all night, overnight, hang out here, and then go boom tomorrow. Or it starts tonight, overnight, in the Globex session. But there should be these pauses, this holding it up above 15,900. No. If this is all being rejected and this is over and that's a primary B and we're starting a primary C hourly chart, I need to see 5 waves down form on the hourly chart to give me an indication that that's the case. Last scenario. 4, 1, 2, 3, 4, 5, minuet wave 1 of minute wave 5. Now, if that's the case, well, we're going to turn this around. I'm going to show you. First of all, where's that break point going to come? Well, the break point would come if it broke 15,000. Let's get that low to be exact. It would have to break 15,945. Right where, oh yeah, there it is right there too. Sorry. 15,945. If it breaks that, then it's not a wave 2. Because what we'd be looking for, if this is wave 1, there's wave 2. And wave 2's already came down and almost touched 78.6. A retracement. And was getting ready to hit the hourly 200 SMA, which is at 16,001. It starts to break that. You know why they held that up? Because to break it would go, whoa, kind of blow it all away. So the third option has the lowest probability right now. If they turn this around, Globex opens, they turn it around and they start buying it, and they continue to do so overnight, yep, well, it'll stay active. But then what it needs to do, if this is a 1-2 and we're moving in the third, hightail it straight back up like it fell and not look behind, not look behind. So those are the three scenarios. Which one am I kind of putting my weight on? The first two. If the irregular B wave, so if wave 4 is still alive and we still have that fifth wave, that'll jump up and get us up here or even higher tomorrow on the numbers and then reject again. I am still looking for the completion, and it may be complete at today's high. Bringing it back out to that 4-hour chart once again, it's going to end in a little bit of a failure. A little bit cleaner of a failure, by the way, right? Because this high is 16,251. 51, 52, somewhere in there. Yeah, 251. This high is 16,208. So it still ends in a failure. And if it does, stopping the way it did today shouldn't really happen. A failure, you're rolling over. It's rolling over and just not stopping because the next wave is underway. And it failed because it just got overwhelmed. It was just the sellers moved in and kaboom, that was it. But they came in and bought it back up on the close, buy on the close orders. So we're going to have to wait and see. But there's your three scenarios. In fact, because I'm unsure of that one, I'm taking it off right now. And actually, I should take this off as two, but I will leave it on to show that wave 4 could possibly still be in progress. Let's go over and look at the S&P. It really is the same thing. Going to start here on the 4-hour chart. Here we have, again, the possibility we got close to 4,600. We got up to 97. Resistance was at 94. First line of resistance was at 94. Here we are. X wave, we're working a double. ABC, very strong now. With that rejection, I'm ready to move these to intermediate A, intermediate B, and we're in an intermediate C wave, and these all become minor degree. Now, let's drop it down to that hourly and take a look. Let's take a look at the inside. Here we are inside this 4. We've got the same thing, but even here, it was even closer. Right? A, B, and ABC down, right? A, B, C, C. Ugly. I think it almost can be a triangle pattern. A nasty looking one, but it does work. Or just a straight ABC. Wave A. ABC, wave B. Irregular. It went over by $3, $4 at the max, and then was rejected. Came back to the hourly 200, stopped, rallied into the bell, and then rallied a little bit after, that extra hour that they get. Now, if it is an irregular B wave, C wave should come down to 45, 42, 43. That's above minimum for wave 4. So, but puts, C wave puts in a little bit of a new low below the A wave. Good enough. And then we shoot up and we end up back up. And that comes back in 46.23, 46.40. And then we get another push that I actually took it off. And that comes in at 46.70. And those would be associated with wave 4 being put here, and then it's the Fibonacci for the fifth wave comparison to the first wave. So it would be minute for 5 as compared to minute wave 1. Or if they get bumped up, minor 5 as compared to minor wave 1. Either way, same deal. And that would suggest we still got that trip up to 4640, which is pretty steady, keeps showing up. But we begin at, I think the whole thing comes like 23 to 40, somewhere in there. And then we have 4670 above on a stronger push. Now, other scenario, take it all off, take off both that and the irregular, and this turns into 4. And I'm going to put it up there because, to tell you, it does fit. And we take that off. That's the 4. And this would be the 5. Now, that's also possible. What isn't possible is that it's 1, 2, 1. No. I think I could probably bring it down to a 15-minute chart. Pull this open. 1, 2, 3, 4, 5, 1, 2. 1, 2, 3, 4, 5, 3. And then that breaks it all. So it leaves it as a 5, 3, 5. Still could be a 5th wave. Still could be done. We've seen this now before where we get 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5. Not pretty, but I'm not breaking any rules. And these are some of the changes that I have noticed within Elliott. And that would then suggest we got the 5. And it would suggest this does not go up. We go 1, 2, 1, 2, and we drop. And we drop seriously. So all of these get removed and we just start going down. So, because right now, this would be what would be left over for wave 4. Right? And we already had the FTC irregular, we're coming in above all that. So even these would come off. And those go to this. AB, where the C wave should come in. Wave C would be 100% of wave A up at 4640. So that all fits. It would be 1.618 at 4816. Should we get something spectacular? But it would have to turn. And right now, this is kind of ugly. So what would allow that to go up and make that type of a turn? In irregular, but the irregular has to come down overnight, and that number tomorrow has to be a catalyst that lights a fire. So there's our scenarios. The first one, that wave 4 is not complete. It's an ABC, an A and a B, and we're looking for the C wave, and then an ignite higher in a 5th wave up, still with 4639, and then secondary up to 40, 48, 15, 16, up in that area. That would be one. The other being that 4 is complete, 5 is complete, and the market just begins to head lower, breaking these levels. A break below 4,500 should seal that in place as the high and the completion point for the C wave, and maybe a slight failure, but still fits. It really does. We got up to 46.97. Now, I want to, I can do it here. And this high up there was 46.84. So double ABC, yeah, could be done. Slight failure. Everything turns into that. Then we get the double ABC, an intermediate C, primary wave B. A little bit of a failure, but it just could show that there is weakness underneath the market, that there is something that's going to tip it over. And maybe it'll be the PCE. We don't know. But those are the three scenarios, and they're the same in each of the S&P and the NASDAQ. Now, before somebody jumps on the bandwagon, you don't know what you're talking about, and et cetera, et cetera, et cetera, it's like, I'm giving you three scenarios. And each one of them, except for number three has a less chance. But the first two have a 50-50 probability of being the ones in play. And so we allow the market to tell us and trade accordingly. That's where I'm going to leave it for right now. Tomorrow we do have, again, jobless claims and PCE, plus I think it's like 3 or 4 more governors are going to be out there. Fed governors are going to be out there talking up. Let's just take a quick, see what we got going on. So we have, November the 28th, that was today. So tomorrow we have, Thursday, excuse me. We have initial jobless claims, PCE index, and we have New York Fed President Williams. He's out there speaking at 9:45 Chicago Business Barometer and 10 a.m. pending home sales. So enough, but the major one, PCE index. That's where I think everyone will be looking, along with jobless claims. All right, so next update, Thursday, November the 30th. And we're hoping that this all will be resolved and we'll know what the market is doing. Have a great evening.